Welcome to Sectors Up Close. I'm Elena Casas. Today we're talking cryptocurrency and my guest is Ross Gerber, founder and CEO of Gerber Kawasaki. There should be lots of presents under the tree for Bitcoin investors this Christmas as the price of the world's leading cryptocurrency hovers around $100,000. It's been one of the biggest winners from the re-election of Donald Trump after he last week named former PayPal executive David Sacks as the so-called White House crypto czar and pro-crypto attorney Paul Atkins to lead the SEC. So, is the sky now the limit for crypto? Let's ask Ross Gerber of Gerber Kawasaki. Ross, hi. So Donald Trump has promised to be a crypto president, but what do you think that will really mean? How will it translate into policy?
I think the most important thing is really having an SEC and a governmental structure that really supports digital currencies versus really just attack and destroy. And there's been a lot of fear about Bitcoin for the last decade. I've been involved with Bitcoin since 2014, so it's been an incredible ride with lots of lows and highs. And a lot of it's around criminality and theft and a lack of regulation, whether it be FTX, Binance, the major exchanges going down as basically frauds and money laundering. And so by having regulation that makes sense and bringing this industry into the next level, it's one of the reasons why people are investing now, because now the government's going to start looking at what can we do to make this legitimate versus how do we just bust people for doing it. And so that's a major plus and I think creates a lot of demand for cryptocurrencies.
What do you make of the individual appointments that have been made so far?
Well, basically, this is a bought and paid for government here in the U.S., so the crypto investors invested a lot of money into Trump, hoping that he would win. And so they're getting their payoff by having their acolytes being appointed into positions of power to oversee the cryptocurrencies. It's not going to protect people from fraud, though, and that's what I have to warn people, because we've already seen frauds in the United States with certain coins already, and it's like the minute Bitcoin starts to do well, the criminals and the fraudsters start taking advantage of people, and that's something that the government can't help, and less regulation or less oversight doesn't help individual investors, and that's why you have to be very, very smart, and why we've stuck with Bitcoin for the last decade, and it hasn't led us wrong. So I would recommend the same. I would not go into anything other than Bitcoin.
This goes to the heart, though, this regulation debate of what a cryptocurrency even is. The previous administration regulated them mostly as securities. Are they securities? Are they commodities? How should we regulate them?
Well, cryptocurrencies, it literally says currency in the name. So they're currencies. It's very similar to, I would say, the euro. And so when you look at the euro as a currency, what gives it value? And you could argue the same thing about Bitcoin. And so really currencies across the globe have what we call perceived value based off the stability of the governments or the people backing it. And we've seen governments go down just this weekend, like in Syria, very, very rapidly. And we're seeing a major shift in the global economy and power. So Bitcoin makes a lot of sense if you're a global citizen to have your money in something that's protected. It's not governmental owned, but yet a currency that's accepted around the world. So it's a currency.
Increasingly, Ross, especially since the launch of Bitcoin ETFs, we're seeing institutional money going into it. Do you think it's a safe place to put institutional money now, or is it still potentially a bubble?
Well, we were the first institution in America to really take an aggressive position in Bitcoin for clients, and also in my ETF, GK has a position in the Bitcoin ETF, which BlackRock was really the first company and a few others to really get an ETF out there so people could take advantage of Bitcoin without having to go through that sort of hassle of owning Bitcoin. And it's a lot safer for most people to actually own the Bitcoin ETF than Bitcoin themselves because of all the issues that can happen in ownership. But really what we're seeing now is just the beginning of institutions just literally tiptoeing into this. And I would argue that just the institutional demand alone could double the price of Bitcoin if and when these investors realize that they need to own this just like they need to own gold. So in our portfolio, we own a little bit of gold, and I have for my whole career, and it's a hedge against inflation, and cryptocurrencies work in a very similar manner.
You don't then see a ceiling on the price coming up anytime soon?
Well, there's no ceiling on the price of the dollar either. So with high interest rates and current policies, the dollar could keep going up in value for some time as well. So, the value of currencies change, as I said, based off the perception of the value of those currencies based off the economics behind it. And we're seeing sort of a revolution here in the United States of, the billionaires now taking over the government thinking they're going to fix things. So this is an interesting experiment. But I think across the board, governments need to get their financial houses in order, and that's what makes Bitcoin so attractive.
Ross Gerber of Gerber Kawasaki, thank you so much for that analysis. Well, that's your look at the cryptocurrency boom. Don't forget to watch more videos on Reuters.com.